and welcome to the show. It's great to have you with us. Home prices in the Greater Toronto Area have seen a 4 consecutive month-to-month decline, falling an average of $173,000 since April. But prices are still up about 3% compared to August of last year. So are we finally seeing Toronto housing prices stabilize for good, or is this just a reprieve? Or what about the other hot market, Vancouver? We have brought together two people who know an awful lot about what's happening in Canadian housing market. Beata Caranci, she's the chief economist at TD Bank Group, and joining us from Vancouver, Don Campbell, he's senior analyst at the Real Estate Investment Network. I'm so thrilled to have both of you here. Again, for the perspective, I mean, I love the fact that we've got, I'll say top end and kind of on the ground perspective in terms of what's going on. So I want to position this, or I should say pivot this on a report that you guys actually came out with, Beata, talking about the Canadian Regional Housing Outlook, navigating a soft landing. And the first question was on your report. Well, what's been the impact of changes in government regulation? So just refresh us what the changes were, and then what you've seen thus far as the impact.
So the federal government put in place more regulation at the tail end of last year. Now, keeping in mind, this was the 6th time since 2008 that we've had regulation. So we've had a lot of attempts. You may remember at one point we used to have 0% down on homes, and that no longer is the case. And that was one of the first things that they changed, back post-recession period. That had about a 10% impact on depressing sales, we estimate, when they took up the down payment requirement. And then what they did at the end of last year, they continue to follow along that same trajectory of ensuring that there's more down payment if you are taking out insured mortgages. So that means you're not making the minimum requirement of 20%, as well as more stress testing. So if you are taking out an insured mortgage, you not only have to make sure you qualify at the contract rate, which has always been the case in the past, so that's what you're getting on your bank, to now the Bank of Canada posted rate, which on average is about 200 basis points higher. So it's putting a much higher bar. That we estimate only impacted sales by about 2%. And the reason it had a much smaller impact is because there's far fewer individuals who take out insured mortgages. So that ratio is only about 20%. Back in 2008 and 2009, that would have been as high as 40%. So the regulation is targeting a smaller and smaller segment of group at the federal level. And then, of course, Vancouver and Toronto, Ontario, BC had their own provincial measures that they put in place, which had bigger impacts. Yeah,
they certainly did. We're seeing a picture actually right now, I think that came from Economist on, you can see where the provincial policy changes were, the red lines and the downward fall, although noted, Beata, I know in Toronto it's bounced back in terms of sales, not prices, but sales. Correct. Don, let me ask you, I mean, we've talked about, I think, when the regulations came out and what you thought they're going to do. Beata talked a bit about, what has happened. From your perspective, what has happened and what do you see happening because of it?
Well, first off, confused markets always say, oh my goodness, and oh no, run for the hills. So whenever a rule change occurs, people just tap the brakes for a little bit to see how it's going to play out. That's both investors and home buyers, and that's exactly what we witnessed. And now we're witnessing that in GTA and all the way south, that whole area that they put the foreign buyer tax on. People went, well, wait a second now. How is this going to play out? Why would I buy now? And now we're starting to see those basic economic and demographic supports of the market come back into play. And the market says, okay, well, it's not that bad. And it only hit a small and mostly higher end part of the market, hence the average sale price going down. And we're starting to see the churn come back based on the facts, which is the economic demand and the demographic demand. When you're still buying properties that your mortgage and your taxes, everything, are cheaper than your rent, you're still going to see people moving into those marketplaces.
Let's talk a bit about economic demand, because one of the things you highlighted in your report, Beata, as well, was foreign investment. Actually, Don, I'm going to start with you. What do you see in terms of foreign investment right now? I mean, what did the changes stifle it? Are things coming back? What are you seeing?
I think the foreign investment tax, we have to be realistic. It was initially an optical move because, foreign bad, that whole thing that starts, it's really easy to target somebody who you can't really identify. So by doing so, it helped on a policy and maybe a voter side. But frankly, what we've seen in Vancouver is a slowdown in those $2, $3, $4, $5 million properties, and not a big slowdown in condos. And then now that the market has come back to its reality, those top end prices, the luxury market, probably the prices have dropped maybe about 14, 15%. So the foreign buyer is still looking at going, well, I'm still paying the same amount of money. I don't care if I have to write 2 checks, one to the government or not. Canada is a safe place and is known as a safe haven for capital. And with the way that the world's going right now, it's becoming even more attractive. And that's why we're seeing the foreign money come in. They just move it to, like, for instance, Montreal or Ottawa until they see what the long-term impact of the 15% tax is going to be. And frankly, it's been very, very minimal.
Do you see that? It's been minimal?
Yeah, I would say, so Vancouver, when the government was collecting the statistics on it, had shown just before they put in that foreign buyers tax, that you were looking at about 9 to 10% of sales that were transacting in the course of June and July being sold to foreign buyers. Toronto was about half that impact. So the Toronto swing in sales never had a strong foreign element like we were already seeing in Vancouver. On the margin, it was material, though, because we had a very tight market. So whether it was 4%, 5%, it was actually tightening already a tight market. So really, the Toronto market was reacting not so much to the foreign buyers tax. As Don said, there's rules that came in and everybody went to the sidelines to try to observe. Ontario put in 16 measures of most material of those things like rent control that took out the domestic speculation side. And we had written about that back in March, saying we didn't feel that the Toronto market was necessarily a foreign buyers market, as it was more a domestic speculation market that was driving it. And so when they put out the broad measures, you saw that portion really step back. And I don't think the foreign buyers were as materially affected.
All right, I can see in my peripheral vision, I can see Don nodding vigorously. But we're going to come back in just a second. When we come back, we're going to talk a bit more about this market, and really the end of this conversation, what we want to get to is, what does this mean moving ahead? Are we seeing a soft landing? You're watching Money Talk. We'll be right back. We are back with Beata Caranci. She's Chief Economist at TD Bank Group, and Don Campbell, Senior Analyst at the Real Estate Investment Network. He joins us from Vancouver. In the break, I was telling him how much I wanted to cover, and Don pointed out to an incredible fact that he found in the TD Economic Report, because I was asking, I said, will a millennial ever be able to buy a house? And Don, I know it's Beata's fact, but you tell me, what was the fact you found there? It was like, what's the percentage of millennials that own homes?
Yeah, on page 4 of the report is an incredible fact that throws a lot of the myths out of the marketplace. It says under 35 years old, 53% of Canadians under 35 are homeowners. So the millennials not getting into the market, maybe if these facts are as correct as Beata's facts always are, then guess what? Maybe the myth is wrong.
That's interesting, because I think a lot of people, people are just wrong. They think because they keep complaining about it.
I think they feel the stress of, that the entry point now is getting harder and harder. But we did a report a good year ago where we compared millennials to what their parents' home ownership rate was at the same age, so when they were in their 20s and 30s. And the millennials today have higher home ownership rates than that generation did. And it steps up. So remember, millennials aren't as young as we used to think they were. At the top end, they're now 36 years old. And so you do see home ownership rates really climb as you get from your mid-30s into your 40s to as high as 70, 80%.
All right, I think it's the Gen Xers who are going to be eternally youthful. I'm going to stick with that one. Okay, a bit of rapid fire here, if I could. I want to talk about interest rates. I want to talk about population growth, and then where you see things headed. So, Don, I'll start with you. Interest rates. Bank of Canada has nudged up rates a couple times. How much impact is that going to have in the market?
It's going to have a little bit of an impact. Mostly it's going to stir buyers because they're going to have that FOMO kick in, and they're going to, oh, this could be the bottom. And start to move in. That will, and then when the next one hits, whenever that'll be, October or longer, that raise will be the one that starts to slow the market down a little bit for it to take a breath.
Beata?
Yeah, so I would agree. What sometimes happens is you get a pull forward in demand because people who are sitting on the sidelines figure, I better get in now because the rates are going to continue to increase. So that might be part of the reason we saw sales rise in the Toronto market as a result. As we go, 6 months to a year out, it should have a more material impact on sales as we go forward. Keep in mind that although interest rates are up, about 100 basis points on the government yield and less so on mortgage rates in the past year, they're still lower than they were in 2012 and 2013. So these are not really oppressive rates that we're looking at.
Beata, population growth. I mean, we kind of anecdotally everyone kind of smiles and say because of maybe what's happening in the States, we're going to get more people coming to Canada. But is it, just in general, material growth, is it material to the housing conversation?
It is. So population growth, we've had a very strong immigration growth here in Canada, and so that actually adds to household formation. population. One of the more material factors that have been affecting Ontario and British Columbia is that they have been receiving a population base from Alberta, Saskatchewan, from those provinces that were hit by the oil sector. So that influence is likely not going to hold because those economies are now bouncing up. And in fact, Alberta's growth is supposed to be about 4.5% this year.
Low base will do that,
yeah,
yes.
It will. But that should provide more employment opportunities. So the population story still remains solid, but just not as strong as we've seen in the past.
Don, do you agree?
I agree, and it's very easy to watch. So you can see the Calgary housing market when the population, and it's less the population growth than the migration growth, because population growth is having babies. So you have fewer, you don't need a larger house or another house. But when you're moving more families in, that's when you see it. And that's what happened in Calgary. And then when the families left, guess what? The market got soft. So very, very easy read. Yes.
Okay, my last question, the one that everyone needs to pay attention to. So I'm going to ask you both to prognosticate in terms of, and we got a little bit of time here, but Don, what do you see? I mean, when you and I are sitting down and talking about housing, as we do a lot, but as we talk about this next year, what's the conversation we're having?
Well, I think that it's very important that nobody thinks about it as a national market. I think it's more regional than we've ever seen it before. I think that what you're going to see is the Vancouver Lower Mainland start to bubble again, and I hate to use that word, but you're starting to see the demand kick back in, and same with GTA. Once the fair housing plan comes through and everybody figures out what's happening, you're going to see rents start to dramatically increase, because what the government has done is scared out a lot of the people who own rental properties, which CMHC says 50% of all rental properties are owned by individuals. They're scaring them out. There's going to be fewer rentals. So prices will soften or at least stay flat, but rents will start to go up.
Beata?
Yeah, I think we see it a bit more that it could be a bit of a sideways market next year. And the reason is because it really depends on what the Bank of Canada does from here. So all they've done is done a 50 basis point increase and less so in mortgage rates. So this is not a huge adjustment for individuals. And to Don's point, that regulation does tend to run off within a 6 to 12 month period. But what won't run off is higher interest rates. And that's the distinction of this cycle versus what Vancouver went through last year. In 2016, with their regulation, they had regulation come in during a falling mortgage rate environment, and this should be a rising mortgage rate. So the speed at which we see those interest rates move from the Bank of Canada will really determine which way this market goes. So that's why we don't have a lot of optimism of a strong bounce back, but we think there's fairly good possibility of stabilization because the economy is perfectly fine.
I will have to leave it there. Brilliant conversation. Let's do this again sometime. Don Campbell joining us from Vancouver, Beata Caranci joining me here in studio.